Welcome to The Explainer. Today, we're diving straight into RPM International's Fiscal 2026 report. We're going to unpack exactly how this absolute powerhouse in specialty coatings and building materials managed to pull off record results, all while the rest of the global economy was, well, dealing with massive volatility. So let's jump right in. $7.86 billion. Just let that number sink in for a second. That is RPM's record fiscal 2026 sales figure. It's a solid 6.7% increase compared to their prior year record. Right out of the gate, we're looking at a story of profound corporate triumph and honestly some incredible resilience. But top-line revenue isn't the only thing breaking records here. Take a look at their fourth quarter adjusted EBIT. It hit a record $338.6 million. That's up 7.7% from the prior year. The absolutely crucial takeaway here: they pulled this off despite immense global supply chain pressures and, as we all know, rampant inflation. So here's our roadmap for today's explainer. We'll be hitting record-breaking financial results, their map to success, a segment-by-segment breakdown, managing global headwinds, and finally, the fiscal 2027 business outlook. All right, let's kick things off with Section 1, record-breaking financial results. Behind all these massive billions and percentages, there's always a human element. Chairman and CEO Frank C. Sullivan actually points out that, once again, our associates achieved record results for the quarter and full year during a volatile economic period. It's really the talented associates driving these numbers. They did it by nimbly targeting growing end markets and, frankly, winning a much higher share of construction project spending. Breaking down that fourth quarter a bit more, the numbers are just fantastic across the board. Q4 revenue hit a record $2.23 billion. That's up 7.2%. Adjusted EPS climbed 9.9% to a record $1.89. But arguably the most staggering number here, $898.7 million in operating cash flow for fiscal 2026. To put that in perspective, that's the second highest amount in the company's entire history. And this really highlights the consistency of their execution. RPM has generated record consolidated adjusted EBIT in 16 out of the last 18 quarters. I mean, when you think about the absolute economic roller coasters we've been on over the last few years, a track record like this, it reveals some true structural and operational resilience. Moving right along to Section 2, the map to success. So RPM's operational improvements aren't just your typical executive jargon. They get highly granular. They have 620 trained green belts. These are associates who specialize in driving process efficiencies, and they're currently managing a $30 million project pipeline. Plus, by expanding this whole methodology from the factory floor straight into administrative functions, they are keeping their goal of $75 million in SG&A-focused benefits for fiscal 2027 perfectly on track. Next up, Section 3, segment-by-segment breakdown. Now, looking closely, this strong performance was really broad-based across RPM's main groups. The Construction Products Group, or CPG, absolutely led the pack, with an 8.8% sales growth and a massive 14.6% jump in adjusted EBIT. Then you have Performance Coatings seeing solid 5% sales growth and 10.6% EBIT growth. Even the Consumer Group achieved 7% sales growth and a 2.6% bump in adjusted EBIT. So success clearly wasn't isolated to just one lucky division. So, you might be wondering, what were the underlying drivers here? Well, the Construction Products Group really thrived by focusing on turnkey solutions, restoration, and high-performance buildings. Performance Coatings saw massive strength in fireproofing systems, alongside some real double-digit growth in emerging markets. And meanwhile, the Consumer Group successfully offset a bit of softness in the DIY market by cleverly leveraging acquisitions and smart pricing strategies. Let's pivot to Section 4, managing global headwinds. As you'd expect for a global company, the regional impacts varied wildly. In North America, which, by the way, accounts for a massive 77% of their total sales, they experienced medium inflation and some tightness when it came to specific raw materials. Now, Latin America and Europe saw similar inflation, but generally had good supply. Conversely, Africa, the Middle East, and other regions faced the highest inflation and some really sporadic supply tightness. Maintaining growth through all this required hyperlocal, hands-on management of vastly different dynamics. A major piece of that puzzle, of course, involves raw materials. While global supply availability is generally good right now, the situation is still incredibly dynamic. In fact, RPM expects raw material inflation to actually rise, going from 5 to 6% in Q1 up to 6 to 8% in Q2. Yet through some really smart procurement and pricing actions, they managed to outpace inflation dollars in Q4, and they expect to remain pretty much neutral heading into Q1. And finally, that brings us to Section 5, Fiscal 2027 Business Outlook. Now, before we look at the projections, it's vital to note an important reporting shift. Starting right now in fiscal 2027, RPM is transitioning their primary metric from adjusted EBIT over to adjusted EBITDA. This change is specifically designed to make it a lot easier for analysts to compare RPM to its peers, and it just better reflects their underlying profitability, especially during periods of acquisition. So armed with that new metric, their fiscal 2027 outlook is highly confident. For Q1, they're projecting mid-single-digit growth for both sales and adjusted EBITDA. For the full year, they anticipate sales to increase 3 to 7% and adjusted EBITDA to jump 5 to 10%. And what's really fascinating here is that they are projecting this continuous growth despite anticipating some higher inflationary pressures stemming from events in the Middle East. You know, if you ever want to know how leadership truly feels about a company's future, just look at how they spend their cash. The board recently authorized a staggering $700 million increase to their existing share repurchase program. That is a massive indicator of corporate confidence. Plus, they've scheduled an investor day for November 9, 2026, where they'll outline their next strategic operating improvement plan. So we've seen the record revenue, the incredible consistency over the last 18 quarters, and the sheer operational rigor of their MAP program. They've successfully navigated global supply issues and inflation, which leads us to a final, pretty fascinating question. With $700 million in buybacks and a brand new operating plan on the horizon, is RPM's momentum truly unstoppable in fiscal 2027? Think about it. Thanks so much for joining me for this explainer, and as always, keep learning.